This market, as you were talking, Blake, we've got the futures completely reversing course. Earlier, we were expecting an 80-point rally in the Dow Jones Industrial Average. Now we're expecting an 80-point sell-off when the market opens on these numbers. The numbers weaker than expected. 142,000 jobs added to the economy in the month of September. Unemployment rate stays at 5.1%. Very quickly, we've got an expert panel today. Bill, your observation on this number.
Everything's gone the wrong way, and now I think we're going to have to worry about whether we actually have 2 to 2.5% growth anymore. And I think the Fed, is going to have to put on hold.
It's gone the wrong way, but it's gone the right way in terms of your scenario, Keith McCullough. You've been predicting this.
And looky here. Look at the revision to the August number, 136,000, not 173. So again, now we got some really bad numbers. This happens at the end of every cycle. I'd love to hear what my friends have to say about that.
Charles Payne, what do you have to say about this morning?
I'll just say in a word, it's extraordinarily heartbreaking. Maybe the Fed knew about this all along.
Yep.
You know, all of this junk about importing deflation and everything else was just a smokescreen. And that's why maybe the markets reacted the way they did when the Fed didn't hike rates. Didn't hike rates. You know, we crashed.
This is the point, actually. The bad news, this was a tough one. Like earlier in the show, we said a bad print, you get 198 on the 10-year. Bing, bing, bing. That's what it is. But bad news, bad for the stock market, Charles. This is one that people have they have some trading to do, is what I'd say.
Would you buy into this?
Not today. Absolutely not. I've been sitting on cash, though. I mean, I see a lot of individual names I think are down with the crowd, but this is scary stuff.
This is scary stuff. Go ahead, Bill.
This is going to question your earnings profile, because if we don't have domestic earnings offsetting the lack of international earnings, that means it's bad news all across
I had no expectations for earnings. First of all, S&P 500 earnings are expected to be down because of energy, but you have to consider the trading partners of ours. They're challenged. Why wouldn't corporate earnings be challenged?
The exchange rate adjustment also helps go the other way, but we were hoping that domestic sectors would try to boost things and make up for it. Now, with these kind of numbers on employment, it looks like there's not a lot of growth there.
The point that we've been trying to make, and it's really tough, and I really don't mean to argue with people, but I've said all year long, you're one bad jobs report away from everyone agreeing with this, and look what's happening. This is what happens. People are very uncomfortable reading yesterday's news and saying that that's going to change. And when things change, they change fast. We call them phase transitions in markets. If you're not long bonds and you're long growth stocks, you got a big problem because, again, the growth profile continues to change in real time.
All right, so what? You've been telling the actual story when nobody was believing you for a year and a half. You were right, telling investors what to do and how to deal with the terrible situation. Thank you.
No, thanks. I appreciate it. Thanks.
Joni, let me ask you about your manufacturing jobs down 9,000.
Yeah, which manufacturing obviously has been lagging all year. It's been lagging 4 years. We've really switched to much more of a service economy. But there's some big disconnects in this report. I mean, we talk about job openings being at an all-time high. It's 5.8 million job openings, the highest it's ever been. And here we have one of the worst job reports we've had in years. I mean, to see this number, downward revisions to August, no one expected that. And then to see only 142,000 jobs created, it is showing that employers aren't confident enough to make those hires. They're posting the jobs, they're saying they have the openings, but they're not adding to their staff fast enough.
I think this gets back to what you mentioned, Bill, because we've been focused on Fed and monetary policy, but let's talk about fiscal policy.
Exactly.
In this administration, which I think they've done everything possible to derail the U.S. economy, and I don't know that we'll be.
Oh, you mean because of Dodd-Frank, Obamacare, EPA?
Yeah.
That's a very good point.
It's just crazy.
If you take both the fiscal and the monetary policy side, it's a complete mess. On the monetary policy side, get this. The perverse reality of what's working in this economy, and everyone who's a bull will tell you this, and I'd agree because we're bullish on housing too, is that rates are falling, therefore housing and autos are doing well. Now, the only reason why rates are falling is because the consensus forecast on growth has been so wrong. Now, that's how backwards this is, Charles. Right. The leaders on the monetary policy side are dead wrong, and on the fiscal side, it's a certified mess.
But you also had these distortions in the asset market so that these asset prices are going to levels that they shouldn't be because we've had rates at zero for way too long. The problem is from the zero rates.
Right.
That distorts everything, and that distorts growth as well.
That's an important point, Bill. A lot of people now on Wall Street actually have been positioned for this, Maria. There's a lot of people who are making money on the other side of the trade. And one is that 0% interest rate policy, what it did was it created overcapacity, bad behavior. And when you have overcapacity, you end up with deflation. Deflation is a really nasty thing, whether rates are going up or not. I'd say that rates, if they raise rates, they'll perpetuate deflation. And people who disagree with that, and there are a lot of them out there, why don't you try raising rates today, guys? Tell me how how those Dow futures are going to look when you do that.
The worst of the bad behavior came from non-financial corporates issuing debt, giving it to shareholders by buying back shares.
Agreed.
The shareholders put it into high yield and emerging market funds.
Yeah.
That's the wrong way. It should have been invested, but they're not investing. Why? Because we got distorted economy.
Right. So we got to break it down to what to do, Keith, because you've had the right call. You've been telling clients and certainly our viewers for a year and a half what to do and how this is going to play out. I'm going to